How's it going? Ryan here. And today I'm going to go over the two trades that I took on SPY, the first being a small loser, the second being a nice winner, and how I overall ended up being green on the day. But before we dive into the trades, we're on the daily chart here, and we'll look at some of the levels that I was watching. Starting from the bottom, we have 429.57. It was an area of resistance that once we broke above it, we haven't reached it again. But would presumably offer a strong support if we do. The next level is 431.1 is the bottom of this swing low, this pullback before we continued higher. 435, an area of support broken below, act as resistance, support again, also is in the range of where we've been trading at the lower end. We have 437.6 or 0.5 rather. Also an area of resistance, broke above it, active support. Now that we're above it, you can see that's where the opening price occurred on Monday. We wicked all the way down below it, but held that level. So let's play and it's the bottom of yesterday's trading day as well, low of yesterday's trading day. So that's been kind of a crucial level as of late. Then we have 444 up top. I mentioned it a lot of times. Area of resistance, area of support. Once we're above it, we're below it. So assuming that it will act as resistance again. And without further ado, we'll jump into it. We'll go into a 15-minute chart just to look at a few other levels that I had from a lower time frame. So we have 442. That was drawn from the high of the pre-market yesterday. Just a local swing high in terms of a target that we might have to the upside. We have the lows and highs of yesterday's trading session marked by the green and red levels. We have the lows and the highs of the pre-market marked by these gold levels. And then we have this 439.2. It was just an area that played an interesting kind of role in the pre-market, and then you can see as you track it back through yesterday's pre-market as well, and some of yesterday's price action. So that was a level that was just generated off the past couple of days, price action, and something to watch. It's also where we opened up at. We opened right at that 439.2 level. With that being said, that's it. We'll jump into the 5-minute chart. We'll talk about what happened, what I was looking for, and the two trades I took. So we were opening right at this level. We found support there, and then we rallied all the way up from there. As we were approaching the pre-market high, I saw us come up on this green candle, target this area, and then wick down. On this following candle, we tested this area. I took a put here. I took 440 puts. My expectation was that we might pull back into this 440 to 440 or 439.7 area. I wasn't sure how much strength we were showing, and so I took some puts here. On this candle, we closed below that level, so that was still very valid in terms of a potential rejection off this level. On the subsequent candle here, we broke above it. We kind of opened right at that level. Once we showed a failure to break lower, pushed up and made a new high. So as soon as we broke above that new high, I cut my loss. That was a trigger for me to get out of that trade, as I figured it was unlikely that if we were holding this level and making new highs, that we would likely have a pullback here. I also realized that I was trading against the trend. Since the beginning, we held that opening print and rallied from there. So it was just overall a realization, something that I tend to do, and I'm learning from my mistakes. Sometimes it pays, sometimes it doesn't. But I often seem to try to time the top or the bottom of a move, which is kind of, it's riskier. It can pay really well if you do time it, but you can also get burnt. So safer bet is to trade with the trend. So this first trade I took was counter the trade. We opened kind of right at that level, pushed to a new high. I cut my loss. I didn't want to stick around trading against the trend and the momentum that we had. So that was my first trade of the day. It was a $16 loss on a single contract of 440 puts for tomorrow's expiration. Like I said, I took them on this candle on the retest, sold them once we made a new high, and showed a failure to break lower. Then after that, I decided to wait. I figured that my next trade would be with the trend. I saw that we had strength today. I saw that we had already broken above our pre-market high, and we're trending up towards yesterday's high of day with no real weakness to show of it. So I decided my second trade of the day, and would be the last trade of the day. If I took another losing trade, I would have called it. So my second trade, I decided to go with the trend. And that occurred on this candle here. So as we came up, we had a strong close. We pushed up. We tested the high of yesterday's trading session. We had a high volume selling candle happen as we tested that area. But we wicked to that pre-market high pretty much exactly to the dot before pushing up. And a lot of that volume was occurring in the defending of that level, I should say, or the buying that was occurring at this area. So with that high volume and that inability to break that level, as well as showing the resistance broken above it becoming support, on this subsequent candle here, when we came down and tested this area again, I took a call position. I took 441 strike price for tomorrow's expiration, so 1 day out. And we had a little chop in here, but once we moved well, and we never actually got in risk of stopping me out. My stop was if we broke this bottom here. You see, we've kind of formed a double bottom where we bounced twice off this 440.5 on this move up. So I entered on this candle, and if we had broken below this level here, that was my stop. My target was to see if we could get to 442. I knew that if we could break out of this range that we were forming here, that we had enough momentum. If we could break out of here with momentum, that we would hit 442 easy. I mean, it was less than $1 move, and then you saw the kind of consolidation that we had here. So we chopped around for a little bit. I was a little nervous taking calls so close to a resistance here. And we had shown twice, prior to when I entered this trade, expecting a move and a break up. We had shown twice that we had rejected off. We rejected again. We kind of rejected again. On this candle, I'm not going to lie, I got a little nervous. But I stuck to the plan. I wasn't going to cut unless we broke that level. I had a pretty good entry, so that risk wasn't too bad. And I knew that if we broke to the upside, which I figured was the most likely, we almost were forming a bit of a bull flag here, where we have a move up, a strong move up, some sideways / downward consolidation, and then a breakout. And then once we broke out, we really broke out. So we did get this break. Once we broke above this level, you can see we broke above with higher volume, and we closed near the top of the candle, really bullish. From here, we wiggled around in this area, just kind of very minimal price action before finally pushing up and closing strong. I sold on the close of this candle. So right pretty much at the top of this candle, I sold for 41.8, 0.9, somewhere in that range. My target was 442. But I've often found that if you're pushing up, you have momentum, and you're within 10 cents of the level, I'm going to take my profit there. Is because often you can, when you do reach one of these levels, especially with a big move like that, you might have a bit of a pullback. So we did hit that level and break above it, and you can kind of see how the rest of the day played out. Once we broke above it, we fell below it slightly. But then continued to trend up. We did not hit the target of 444. We got within about 50 cents of it, or even less, perhaps 30, but we did not break that level. We broke above it in the aftermarket, as we're seeing here. Looks like we're showing strength in the aftermarket as well. But it was nice to have a trend day. We opened up within yesterday's range, which usually signifies that we'll have choppier price action, but we broke out with strength and continued that trend through the day. I was able to make the most out of getting in on the bottom of this bull flag and ripping this up almost to my level. Got in pretty much at 440.68 at this level when we retested it, sold at the top of here, so over $1 move. Yeah, it was really nice. It was about like a 32% return on that. Overall, I ended up positive on the day for $40, one of my biggest days lately. Trading off a single contract, and that's after taking a loss. So big lesson: cut your losers. Just get rid of them. You have to have a reason to get rid of them. Don't just cut as soon as you see red. But we formed a new high, and that was my reason for getting out of the trade that I did. Is we showed an inability to go lower. We were in an uptrend, and we set a new high. So all those things kind of told me get out of that. Just cut the loss and accept it. But that allowed me to come back and take a second trade, and it went in my direction, and I made up that loss and more. So great lesson for me. Stop trying to time the tops and bottoms perfectly, especially if we don't have like clear, hard price action plus volume confirming at that level. Instead, the trend is your friend, and I hope you learn from that mistake as I have. With that being said, thank you for watching. I appreciate you. I trade live every Monday through Friday, with the exception being this Friday and Monday. I will not trade live because I will be traveling. But generally, every Monday through Friday, I'm trading and I'm live streaming. If you feel so inclined, stop by, say what's up, hang out. I'd love to see you there. And with that, have a great day. Peace.